Well, these markets have certainly been interesting the past week. Yeah, we've kind of seen, I think, everything from what people are calling a crypto crash, a crypto sell-off. I beg to differ. I kind of call it a pullback that is necessary in order to propel us forward. So, yeah, that's kind of what we're going to be looking at today. I'm going to be giving a kind of a breakdown and analysis of kind of how I see Bitcoin moving forward as we move through the first half of the first quarter of 2023. Hey, so if it's your first time here, my name is Tom Gerchek, founder of the Consultant.Trade, where we help traders maintain consistency to create profitable futures. If that's something you are interested in learning more about, head on over to the Consultant.Trade. I'd love to see you there. So let's go ahead and dive into some Bitcoin futures charts here. Today we are predominantly going to be looking at the daily chart, and we're not really going to hit on anything else, but mainly because Bitcoin is the big time mover of the crypto markets. Whenever Bitcoin decides to move in any direction, we typically see Ethereum and pretty much everything else move in lockstep, or a little bit of lag to some degree. So what I've got shown here on the screen, I do kind of have some notes here. This is kind of something I put on here for myself, but these are kind of taking note of some of the recent pullbacks from the beginning of February. Some are around 10%, 7%, 8%, and another about 10.5% pullback as of the recent higher high. So let's get rid of the oscillator down there. It's really only used kind of as a reference. I don't use it to trade off of, so it's really not that important. So what's most important is the price action here and the Elliott wave. So as you can see, we finished our leg third wave. The third wave here, the leg 3, that ended right at the beginning of February. Formed leg 4 about 2 weeks ago, about a week and a half ago, and then we've got, actually no, that would be about 2 weeks ago now. Yeah, and then we've got leg 5, which is kind of this whole thing here, leg 5 and our correction wave leading into wave A, or wave A, is kind of what we're going to be taking a look at today. So I guess I'll just kind of get into it here. Basically what I'm going to talk about is two different scenarios. Okay, the first scenario is our wave A, the first wave of our correction wave. If this truly is A, what you can expect is, if this is A, we need to be forming leg B, which is a move in the upwards direction, typically within the 50% and 618 retracement of wave A. So this is the Elliott wave projection from TradingView. I kind of take it from a grain of salt and kind of do my own analysis. So here's what we're going to do. So starting from the end of wave 5, or the beginning of wave A, coming down to the completion of wave A. So I'm just going to move that all the way out so we can see the numbers, and down to the bottom. So as you can see, the Elliott wave projection does line up with the Fibonacci 618 and 50% here. And so here is my my analysis. So what you see here, actually, I'm gonna delete this part here so I don't confuse anyone. That was last week's analysis with I believe the 1 hour and the 4 hour chart. So go check that out if you're interested in knowing more about that one. The projections that I gave last week seem to be pretty spot on. A little bit of a difference, which is expected. So, all right. So we've got wave A, and we see that we've already formed the bottom here. So this is scenario 1. What we would expect is the formation of the end of wave A here, a move up to either the 50 or the 618. Okay. And then a move down to form leg C. Okay, leg C. So this is B and then wave C. So A, B, C, and then we would go in the whatever direction our next impulse wave would be. Hopefully it's in the upwards direction. I think that's what we would all be looking for. So this right here would be typical scenario for the corrective wave based on Elliott wave. However, here is what I think is also possible. I want you to take a look. So this is the daily. Okay, mind you, this is the daily. Look at these candles here. Look at this top. Okay, we've known that 25,000, which is just above the 786 retracement, just above. Look at where that lands. Right in here. Right in here. 25,000. We see long lower or long upper wicks to the upside where the full body candles are below that. Okay, that shows pretty good resistance for a rejection at 25,000. So I think what a possible scenario is yes, if this is truly the finish of leg A, and meaning we don't go past this point, we can either go sideways or we can go up. But if we go down, it's going to be a continuation to form leg A. And of course, the longer the further down we go with leg A, it means B is going to have a lower priced retracement, and C is going to be even further. All right, so to kind of round this off, I think what is also very possible is that we go from here and we move past this 618 to 786, and there might be a slight push right up here to 25,000, where we would see again a rejection to the downside to form leg C. All right, leg C does have to be lower than leg A, or wave A. So that is something that you need to take to consideration. If you notice, if this is something that you do if leg A goes up to B, and it's not a 100% retracement, but it does come down. Okay, leg C, you got to keep in mind, wave C, it can also be its own impulsive wave. Okay, that's just kind of how Elliott wave works. So you do have that possibility. So yes, I think that right there is scenario 1. Let's look at scenario 2, which is still kind of in the same area. So I'm going to get rid of that one here. I'm going to use the Fibonacci extension, and we're going to go back and we're going to start from the end of wave 4 to the beginning of wave 4. And basically what this is going to do is this gives the projection potential target for wave 5. Okay, so this right here is what we're talking about. Now we notice that our high for wave 5 is the 25,347. So a potential scenario is that if we see a push towards 25,000, again, that's kind of part of the first scenario. But if we surpass this level, okay, or if we surpass our higher high and we go up here, this would technically, I think, be an extension of wave 5. So this would omit the possibility of this leg right here, or this wave, being A, and 5 would be a continuation right here, and then you would start wave A to come back down, go back up, and then back down. Okay, does that make sense? I know I'm asking you guys like you're gonna answer me, but I think that is a pretty decent scenario 2. Scenario 2 is a little bit shorter than scenario 1 because scenario 1 sets up scenario 2. Either way, what we've got to see a corrective wave here regardless. So, but it's just based off of 2 different waves here. The completion of wave 5 or the completion of wave A is kind of what we're looking to see here. So that is kind of where I want to keep this technical analysis. It's kind of based around Bitcoin, because again, everything kind of follows Bitcoin. I hate to say that because I wish everything else was kind of more in a sectorial rotation, kind of like the normal market, or even kind of in a more freer stance type of market. But that's not exactly what we see. There's always going to be some level of centralization in any market that comes to be, regardless of whether it's crypto or fruit, whatever it may be. If you're trading bananas or whatever, that's a really bad analogy, but regardless of whatever market it is, there's always going to be some level of centralization. So, all right, well, but other than that, I mean, if you guys have, what questions do you guys have about this current analysis? Whether it's this analysis, the trading, or anything about consistency, because that's one of the things that the consultancy, or the consultant.trade is all about. Is about trading and maintaining consistency. So please leave those down in the comment section below. I'd love to answer those for you. So if you guys are interested in any of the tools that I actually use, yes, I do actually use all of these tools that are listed in my description. Some of them give discounts, some of them just kind of are there to help support the channel. If you want to support it in a indirect fashion, if that's something you want to do, check out the links below. I've got stuff down there for Jigsaw, day trader, futures for like oil, S&P, NASDAQ, minis, stuff like that. That's a great platform. That's definitely my choice. Comes with some education pieces when you buy the platform. I've also got some discounts down there for TopStep Trading Combine, probably one of the better options if you want to attempt to go for funded trading. And plus I've got a new platform that I'm trying out myself. It's called Trading Light. There's a link down there below as well. When you sign up for a pay plan, you get $30. You get $30 off. So if that's something you want to check out the links below. And yeah, guys, that's all I got for you today. So stay safe, stay healthy, stay decentralized. I'll see you guys in the next one. Later.